Hello, and welcome to McQuilling TV. I'm Allison O'Melio, and in today's episode, we will be reviewing some of the key findings from McQuilling Services' recently published 2016 to 2020 Tanker Market Outlook. McQuilling Services' approach to forecasting is based on the development of models that combine analytical processes with practical market assessments. These models have become more robust over time, enabling us to capture 95% of global crude and refined oil product trade flows, a key component in providing a reliable demand picture for tankers. These efforts resulted in positive forecast results from the 2015 to 2019 tanker market outlook, as full-year projections tracked within 5% of actual market levels on the 15 trades forecasted. For the 9 DPP trades, the original forecasts ended the year within 3% of recorded levels, while the 6 CPP trades ended within 7%. Between 2014 and 2015, global DPP ton-mile demand increased by 2.4%, supported by an 11.9% increase in Suezmax demand amid higher European refinery utilization and more distant supply sources for this region. VLCC demand rose by less than 1%, while Aframax demand declined for the fourth consecutive year. On the CPP side, demand grew by 9.5% in 2015 as expanded Middle East refining capacity and naphtha arbitrage opportunities supported trade to the Far East and Northern Europe. Increased gasoline and jet fuel demand from the U.S. was met by supplies from the Far East and the Indian subcontinent in greater volumes, while delayed refinery projects in the Caribbean and South America resulted in healthy export volumes for U.S. Gulf refiners. Looking at tanker supply, actual deliveries in 2015 totaled 110 vessels, 29% below our original forecast. We attributed the slippage to a rise in shipyard delays and cancellations stemming from the large order books we saw in the previous years. Vessel deletions were notably lower than our January 2015 estimates, as only 19 ships were removed from the trading fleet amid a strengthening earnings environment and lower scrap prices. The IEA projects that world oil demand will rise by 1.2 million barrels per day in 2016, followed by an annual average growth of 1.1 million barrels per day through 2020. OECD demand growth is expected to stagnate over the forecast period due to improvements in efficiencies and fuel switching. Oil growth demand will continue to be driven by non-OECD economies. As a result, non-OECD countries will make up 54% of estimated oil consumption by the end of the forecast period. China's oil consumption will rise by about 1.7 million barrels per day to just shy of 13 million barrels per day by 2020. We expect to see about 200,000 barrels per day of U.S. crude flows to Europe and South America as a result of the relaxation of the U.S. crude export ban. Combined with a projected production decline of 400,000 barrels per day in North America, U.S. refiners will look to augment domestic feedstocks with increased foreign imports. Watch for U.S. Gulf refiners to revitalize trade with Middle East and Caribbean producers, while U.S. Atlantic Coast refiners seek supply from West Africa in larger quantities. Within the tanker sectors, the Aframax segment will be supported by limited supply growth of only 3.5% through the end of 2020, as well as U.S. exports and the expansion of the Panama Canal, and will likely provide owners with robust earnings potential. In the clean sector, we expect to see minimal pressure on freight rates for the larger clean tankers, as these vessels see a boost in market share of clean petroleum products. New building prices for dirty tankers are expected to increase by 2% on average in 2016, with VLCC contracts averaging $99 million and Suezmaxes averaging $68 million. We project new building prices for clean tankers to increase by 1 to 2%. The 2016 to 2020 tanker market outlook includes a lot of great new features, which gives readers a more robust view of global trade flows and major tanker trades, and answers some of the most challenging questions facing the tanker industry today. For more information, please visit our website at www.mcquilling.com. And that wraps up this episode of McQuilling TV. I'm Allison O'Melio. Thanks for watching.